Have you ever felt stuck trying to decide where to put your money? Crypto, gold, stocks, ETFs? Everyone seems to have a different opinion. Some say Bitcoin is the future, others swear by gold, and some keep telling you to just buy the index fund. But what if we looked at the numbers and real examples of what $1,000 could have become in just a few years? Let's start with Bitcoin. If you invested $1,000 in Bitcoin in January 2020, when it was around $7,000, you'd own about 0.14 BTC. Fast forward to October 2025, that's worth roughly $9,000 to $10,000 today. That's a 9 to 10 times return in 5 years. Incredible! But remember, this ride came with massive volatility and 80% drops along the way. Now let's look at NVIDIA, the king of AI chips. In January 2020, the stock was around $7, split adjusted. By January 2025, it's around $180, meaning your $1,000 would be worth roughly $25,000. That's what long-term conviction and innovation can do. Another solid performer? Amazon. In January 2020, the stock was around $90. Today, it trades near $205. Your $1,000 would now be worth almost $2,300. That's nearly a 2 times return, driven by e-commerce dominance and Amazon Web Services fueling the digital world. Gold, the safe classic, tells a steadier story. In 2020, gold was about $1,500 per ounce, and today it's near $4,000. That's roughly a 70% gain. Slow, stable, and protective against inflation. And what about ETFs, the quiet hero of consistent investors? If you had invested that same $1,000 in the S&P 500 ETF in early 2020, it would now be around $1,900 to $2,000. No fireworks, but reliable and low stress. So what's the takeaway? Each asset tells a different story. Crypto offers explosive growth but extreme risk. Tech stocks reward patience if you believe in the innovation. Gold protects value when markets panic. ETFs build wealth slowly but surely through compounding. A smart investor doesn't pick one. They build a balanced portfolio, a mix of growth, protection, and stability. For example, 40% in ETFs and index funds for stability, 25% in innovative stocks like NVIDIA or Tesla, 15% in gold or silver for protection, 10% in crypto for high-risk, high-reward exposure, and 10% in cash or CDs for liquidity and emergencies. It's not about timing the market, it's about time in the market. The longer you stay invested, the more compounding works in your favor. In 2025, we're seeing new frontiers. AI-driven ETFs that rebalance based on algorithms, green energy stocks leading the next industrial wave, and even tokenized assets where you can own fractions of real estate or art. The key is to understand why you're investing, not just what you're buying. If your goal is long-term wealth, diversify and automate. If your goal is fast gains, prepare for fast stress. So, where should you invest? The answer isn't one word, it's a strategy. Build balance, stay informed. Remember, wealth is grown through discipline, not luck. Follow for more practical insights, and let's make smarter moves with every dollar you invest.